Appraisals are a very important part of the process in investing in real estate. Like, sometimes it's make or break. And fortunately, when you know your market, you're generally pleasantly surprised. It's just a number, but it factors into what the banks and the valuation of the property, what the banks think it's worth, and valuing the property. This is a property we purchased off of our line of credit. We rehabbed off of our line of credit. So essentially, we've got nothing in it. I mean, clearly we've got money in it, but the $80,000 we've spent on the house and the rehab is all off of a line of credit. Now we take that same property to another bank that we do business with, and we say, hey, we'd like to refinance this. We'd like to get a loan on it because we don't have a loan on it. It's not really a refinance, it's an original finance. So we'd like a loan on this property. And their deal is pretty straightforward. You can do 20% down, 15% down of its appraised value. So that's where the key lies, is the amount of money they'll give you. So on this house, we put in new air conditioner, fresh kitchen, fresh bathroom, fresh flooring, fresh paint, inside and out. Just completely updated it. The property should appraise in the ballpark of 125. I'm going to say 120 to 130. So with that appraisal, they're going to lend us 80% of that. Now, we've really only got $80,000 in it. There's no need to take extra money simply because you want the property to continue to cash flow. I've talked about this in other videos, that your cash flow is your insurance policy. Yes, you can pull more money, but your debt service and so forth, you want great ratios there. And you also don't want to take all of the money that you can out. You want it to look favorable to the bank that you're doing business with, and also favorable that you've got equity sitting there. I mean, so there's many ways to consider this, and many ways to work this. But the important thing is when you're doing these refinances, I predominantly only work with small banks. And with these small banks, very often they're using the same appraisers. They've got 4 or 5 guys they like to do business with, and those same 4 or 5 guys are probably doing business with all the banks. So, you've got a half a dozen people that you're commonly looking at your properties. And it's a relationship business. They understand that you're investing in this market. They understand that you know the market. You know the house. Very often they'll ask me, hey, what do you think this one's valued at? I always, tell them to, whatever you come up with is fine. However, I'm thinking in this range. And, very often they'll validate yes, no. Actually, mine's always yes, because I know this asset better than they do. I invest in this particular neighborhood more than they do, more than they would. So boots on the ground, we know this neighborhood, we know this asset, and you're every bit as qualified as they are to value it. But neither here nor there. The bank needs an independent, outside perspective in order to put an external valuation on the property. In some cases where they can do internal valuations when all the numbers look right, but when you're taking a property that's older and has been on the tax rolls for less, and then you're asking for this higher amount. They need somebody independent to go out there and justify that it's worth that kind of money. So just understand that when you do businesses with local banks, it's a relationship business. The appraisal process is no different. It's a relationship business. You're working with the same people over and over. They're there to help you. If they say it's worth so much less, well, then you're not doing something right, or you're not understanding the process somewhere in there, or you're putting the wrong finishes, or you're putting in way too much, or you're not putting in enough. So there may be a disconnect in the product that you're putting out there. But in normal circumstances, you should know what it should be worth. The ARV, the after repair value, or the appraised value. It's all kind of the same thing. When you get an appraisal, that's really the authority. The after repair value is generally just a number that we come up with in our own head, and we want to substantiate it with an appraisal. So again, relationship business, even in appraisals. Now here's the ugly part. The ugly part is when you do businesses with large national banks or large weird finance companies. They're going to call in these appraisals and you're going to pay 2 and 3 times the amount on the appraisals. Where my local appraisals here, $300, $400 on the high end. You may be paying $1,200-$1,500 for an appraisal or more, but they're calling in these companies that they may be driving in out of metro areas or something like that. It's not a relationship business. They don't care. They're going to throw a product out there. Their product is their appraisal. They don't care if it aligns with what you want or your business model or anything like that. The relationship business is out the door. So you've got to be dialed in on your process if that's what you're doing. So again, local banks makes your business life so much easier. You tend to get local appraisers that have a relationship with the lender. They have a relationship with you. Again, relationships. So keep that in mind when you're doing your deals. Just sharing some thoughts with you on my way to an appraisal. Hope you have a great day. Thanks.